Well, in today's Dhamaka edition, the stock that we are focusing on, the company that we are focusing on is a company that we don't speak about too often, but the company has been a steady outperformer in terms of the stock price performance, and also now in the last couple of quarters it has started delivering in terms of its results as well. In fact, when you're talking about this particular quarter, the company has delivered a robust, operationally strong set of results that has actually beaten all of the street estimates by a wide and handsome margin. The company that you're speaking about is SRF. Now remember, this company is in the technical textiles business, also in the specialty chemicals business, and a whole host of other businesses that have now all started to fire as far as this particular segment is concerned. Now, when you're talking about SRF, a strong Q2FY21 results, and what's the key takeaway here is that the specialty chemicals business continued to outperform with almost a 70+% year-on-year growth, and this is mainly led by the higher offtake from key customers, that is BASF, Bayer as well as Syngenta. You're talking about the revenues going up almost 21% on a year-on-year basis at 2,100 crore. The EBITDA margins have jumped up by almost 800 to 1,000 basis points. Core EBITDA is up almost 73% on a year-on-year basis. Extremely strong set as far as SRF is concerned. Profitability is up 5%, and also not only that, the company has also approved a significant CAPEX of almost 425 crore to add further capacity. Now, when you're talking about brokerages, as expected, extremely enthused by the business and by the results. Ambit has maintained its buy, kept the target at 4,750 rupees a share. What they're saying is that the EBITDA has grown over 70%, mainly driven by the better performance across most of the key segments. What they are saying is that while not expected, the packaging film and the technical textiles segments surprised quite positively, and again, that's one key takeaway. The chemical business margin actually improved from higher capacity utilization in the specialty chemicals business. So while specialty chemicals is one particular theme that the market has figured out, despite that, it's actually been seeing higher capacity utilization, and this trend is something that augurs quite well for SRF. When you're talking about the refrigerants space, now that is one particular segment where the company has said that demand as well as realizations over there continue to remain quite muted. Not very optimistic there, in fact quite cautious on that particular side. Now what the company has said, and this is very important to note, is that the specialty chemicals business was the key demand driver, the key reason why the company says that when you're talking about this particular set, it's been extremely strong. Now the other thing to keep an eye out for is that when you're talking about SRF, the key thing is the company has always managed to deliver as far as its own guidance was concerned. The chemical business was up almost 30% on a year-on-year basis when you're talking about the revenues, while when you're talking about the refrigerants and solvent business, even though it declined by 7 to 8% on a year-on-year basis during the quarter, still significantly ahead of estimates. So overall a strong set, and the stock has re-rated quite significantly.